Well, what is not to like about today's market? What's not to like about what happened to Tesla stock today? Well, there was good news in the market and there was good news for Tesla, and this has ramifications far, far beyond a one-day move. So this is Randy Kirk. Certainly by now you know what to do. Hit the like button or hit it later if you want to wait to see if you like it, and then obviously subscribe. We have amazing shows coming up this weekend. You definitely want to hit the notify so that you get notified about these shows. And they're listed down below. You can take a look in the information and you'll see that they're listed. And then love it if you could help me out with some help on Patreon. Okay. Apple rounded out the big tech earnings report. And while the Macs and the iPads were down, the iPhone saved the day again, and they saved the quarter. And so Apple came out smelling like a rose or like an apple. Guidance was great, and the markets gave Apple a 5% raise on what was also a really good day for the markets. The Dow was up 1.65, NASDAQ was up 2.25. Again, Apple was up 5, but Tesla, with basically no news at all, was up even more at 5.5% after outperforming all week. Now, how odd is that? Or is it? More on that later. Maybe you can guess. Can you guess? Put it in the comments below if you've already figured out what I'm going to say about why Apple, after outperforming all week, outperformed even Apple. Did I say Apple? Tesla, even after outperforming all week, outperformed even Apple today. What could be going on there? Maybe you already have that secret. Okay, well, the market was also responding not just to Apple's great results, but they were also responding to a beat on jobs. Now, this beat on jobs was an across the board increase, even manufacturing, construction, et cetera. Everybody was up. Every single sector was up. Wages were up 4.4%. That's above the Fed's goal of 3%. Not good. The total workforce declined a little bit. And that got us to a low that we haven't seen since 1969, 3.4% unemployment. Now that's only, was 3.5 a couple of months ago and had been for several months. It was 3.6 last month. So it's not a lot, but it's still, the unemployment rate is at historic lows. And that's with lots and lots and lots of jobs available for a very, very small number of people looking for those jobs. I think I saw it this morning. I think it was Gary Black that was agreeing with me. I always like to see that, saying that basically you can't have a recession if you have this kind of jobs market. You just can't. It's impossible because those individuals are out there, they're working, they're creating products, they're getting a wage, they're going out and spending the wage. The economy is responding to all of that, and you can't have a recession while you've got this kind of a jobs market. So thank you, Gary, for agreeing with me. All right, wait. If the economy is going great and the folks are employed, spending their wages, isn't that bad news Fed-wise? It isn't like Chairman Powell said no more raises ever. In fact, the market cratered after the Fed spoke on Wednesday, specifically because the chairman gave us a wishy-washy guidance with almost no hope of lowering interest rates later in the year, which was the market was hoping for, and didn't in any way, shape, or form say that there couldn't be more increases down the line if inflation stays up at 4.5%, 5%, or even if it's 3.5%, then we could still see raises. So why did the market go nuts today? I don't have an explanation. I know folks who hold themselves out as pundits, I guess that's what I'm doing here. They're also supposed to always be able to gin up some reason for what happened today. Sorry, what happened today makes no sense at all. Exuberance, possibly? Well, yeah, look, regional banks also were part of the deal. So they rebounded. That might have been part of what made the market go up today. And there were some good things in the regional bank space, like Morgan Stanley. This is probably the big thing. Morgan Stanley reported they gave an upgrade to Western Alliance, Zions, and Comerica, and they said that all of those banks seem to be their stock prices appear to be completely misplaced. Substantially is the word they use, substantially misplaced. So that might have been a reason why the stock market went up. It could have been a reason why those bank stocks went up. With Apple going up, you could understand why the overall market could have been propelled by some of this. The bank stocks those regional bank stocks had been beaten down so badly that one pundit, not me, said it looked like the sell-off was hysteria. Okay, so sometimes you have this hysterical response, and then there has to be a rebound of the hysterical response. So if I was going to grab for straws and I had to have some reason why the market was up today so strongly, it could be just responding to what had been an oversell the last couple of days. All right, that's a possibility. Let's turn our attention to Tesla. So first piece of good news is that China information seemed really good. They had the best first month of a quarter ever in production in China. Also the best in China sales for the first week at any time in the quarter. We don't know right now about exports, so there's no way to get a total visual on all of the sales because some of those might have not been sold yet. We don't know. They could be sitting in inventory, but that's still, in general, it's very good news. Now, that certainly would have been enough to move the market. Now, keep one thing in mind with regard to China sales. A lot of folks forget this. There are no Model 3s being made in Berlin. So all the Model 3s that are sold in all of Europe come from China. So in addition to that, all right-hand car drives are still made in China. So for England, for South Africa, for Australia, New Zealand, all those places, they're still all getting 100% Chinese-made products. They're part of the export effort. These are not tiny, tiny car markets. These are decent-sized car markets. And now Canada has been added to the list of where the China-made cars are coming to China. Canada does not have big import duties on Chinese-made cars. So some models at least are coming into Canada from China. All right, so that was generally good news, but not enough to move the market. Tesla raised the prices of the S and X in China. That's good. More signaling, more letting the world know that probably the price increases are over, and it's a signal. The price decreases are over rather, and that's a signal that if you're thinking about buying, don't wait for lower prices. The time to buy is now. That's certainly psychologically good. Did an entire video on that the other day if you'd like to go back and look at it. But I don't think that was the reason why Tesla moved so well today. I think it probably affected some of the previous days, and I said that in my Wednesday version. Okay, Tesla also added another model to a new variant on the Model 3. This is probably a very good thing. There was a price point that wasn't being covered by the Model 3, and this one nicely fills it. It was also a car that was the long-range Model 3 was very successful until they took it out of the availabilities. So that could increase Model 3 sales, and even another 30 or 50,000 a year would be a significant impact on a year when you're only expecting to do 1.8 to 2 million. All right, but I don't think that moved the market. Okay, Tesla, it might have earlier in the week. That could have been a little stimulus earlier in the week. Tesla introduced a track model of the Model S Plaid. That's very cool. Could have a big halo effect, but not going to move the market. All right. So all of these are good news. And you know what I like to do on Friday is Good News Friday. But I don't think any of those had anything to do why Tesla did better than Apple and way better than the market today after a big Apple beat and after Tesla being ahead all week. For those who listen to the channel, you probably already know that I think this comes down to the fact this adds more proof to my theory, my approach, my thinking that Tesla is macro driven right now, totally macro driven. Good news, little tiny effect. Bad news, little tiny effect. Nothing moves it very much. Sentiment might, like after the earnings report, there was a fairly decent dip after the earnings report, which was not part of the macro. So that was a sentiment issue. It was emotional. But I don't think that is what's moving the Tesla stock day after day after day. What's moving Tesla stock right now is the macro. Today was just more proof of that. So I think the macro that's important to watch is the NASDAQ, if you want to look at it simply, but if you want to look at it in a more complex way, the way I do, I think it moves very specifically with the beaten down, beaten up, risky growth stocks, such as those that ARK covers, ARK Invest, Cathie Wood's company. So take a look at her ARK funds and or companies that are within ARK funds, and you'll see that they're down, some of them 70, 80%, and there's really no reason other than the risk-off environment on the stock market right now. So great end to what was a good week for Tesla, a bad week for the markets, a little bit of a relief rally in terms of banks, that's good, but a strange rally when given that the Fed probably won't like all this good news. Okay, so hope you enjoyed that. If you did, hit the like button, do all the other things like subscribing, join my Patreon if you got $5 a month that you'd like to help out with. And once again, as usual, it's been great talking to you.